Hello, good evening, everyone. This is our presentation about our audit case, KNM Group Burhead. Our group number is Zhuo Xuan, Ma Shentong, Wang Liyuan, and myself. The next picture. So the first part, let's know about the company. The company name is KNM Group Burhead, and it is in the construction industry. It founded in 1990, and the headquarters are in Malaysia. The last auditing agency is KPMG. So let's know something about let's know deep about this company. How about the KNM company Burhead, it is a global diversified multinational group, and the core business are project management, engineering, manufacturing, construction. It is mainly focused on the industries like new renewable energy, power and utilities, refining and petrochemical. It is provide specialized and integrated engineering and technical service for heavy industries, not a comprehensive construction industry. It is very worth noting. And the next picture is about the key financial metrics and the developments. In this part, our group members focus on the financial position statement. The first, we see the main part about the key financial metrics in their 2024 final report. The net loss is 162 million ringgit, and you can see from the profit or loss and other comprehensive income statement on the right side, and the total assets is about 2.81 billion ringgit. The total liabilities are 2.454 billion ringgit, and the law default is 1.33 billion ringgit. So about the whole financial information, we focus on their financial health concerns. We notice that the current liabilities is more larger than the current assets by 449.7 million ringgit. The group level net liabilities are 599.5 million ringgit, and the company level net liabilities are 149.8 million ringgit. That means that we use that the total assets and minus the liabilities. It turns out that the negative shareholders' equity, the company is technically insolvent. So we know the company's concerns, and we then passed to the high financial risk. About the debt to equity ratio, we found that it is almost the 4.24 negative, and extremely high risk level about the whole company. That means that the company may face the bankrupt. The indicators are about very high financial leverage, serious solvency risk, and limited ability to meet debt obligations. The next is about the audit opinion. So after we read the financial position and the financial statement about this company, we focused on their key financial trends, the KNM Group Burhead. The the first is about the long-term profitability challenges. The first, from the past auditor side, they gave the consecutive annual loss, and the core business cannot guarantee enough cash flow, and high operating costs and heavy financial expenses. Business model faces sustainability issues. All the issues may cause their long-term profitability challenges. That means that the company is through a very hard experience, and they can't give a very straight cash flow about their past past year issues. And the two, rising financial risks. About the debt to equity ratio has increased sharply and gave the high debt that is added the equity to the heavy interest expenses. About the auditor's opinion, according to the whole things, they gave the disclaimer of opinion issued by KPMG for 2023 and 2024. The auditor unable to obtain suspicious of the evidence and serious concerns over financial statement reliability. The market and the investors' trust seriously affected and contributed to PN17 classification. Okay, the next part we give the time to our group member Zhuoxuan. Zhuoxuan, can you show some information about your side?
Okay, of course. And then I will briefly explain the audit situation for KM Global Heart. Since 2022, it has been classified as a PN17 company, which means it has financial problems and needs to come up with a recovery plan. In 2024, the company reported a big loss and its financial position showed clear signs of cash flow problems. So on top of that, the company has defaulted on loans and borrowings. And during the audit, the auditors faced many difficulties. And then they couldn't get enough reliable evidence for some key areas below. Firstly, is about the going concern. The company's future is uncertain. Their recovery plans are still in progress, but nothing is confirmed yet. And second, for asset valuation, some major assets were not properly assessed or valued, which raises questions about their real value. And thirdly, regarding investment and receivables, the company couldn't provide proper documents to support the amounts for related to subsidiaries. And fourthly, about corporate guarantees, there wasn't enough information to confirm if the company can recover money from guarantees for defaulted loans. And finally, the opening balances for 2024 may not be reliable because last year the auditor already gave a disclaimer of opinion. So overall, because of all these issues, the auditors couldn't get enough proper evidence. So they issued a disclaimer of opinion again for the 2024 financial statements. Uh, okay, so based on this just talk about, it's clear that KM is facing a lot of serious problems. But to really understand how these problems affect the audit work, we need to look deeper. Next, I will explain the detailed risk analysis so we can see exactly where the risks are inside the company from outside factors and also the risk of fraud. Okay, firstly is about the inherent risk. This means the company naturally has high risks because of what they do and their situation. KM's business is very complicated. They need to estimate project cost and asset values. For example, land and buildings worth 405.9 million ringgits were not revalued as required. And they also have idle assets of about 708.2 million ringgits, but there's no proper assessment to check the real value. So on top of that, their investment and the receivables from subsidiaries, which is 1.98 billion ringgit of investment and 459.9 million ringgit in receivables. They are all lack of supporting documents. So this makes it hard to know if these amounts are accurate. And the company is also facing serious financial difficulties. Especially in 2024, they reported a net loss of 162 million ringgit, and they have seriously liquidity problems. In other words, their debts are higher than their assets, so that's why they are classified as a PN17 company, which means their financial health is weak and uncertain. Well, in addition, they work in oil, gas, and engineering. This industry is risky because the prices can go up and down, and the market are uncertain. And if they can't keep up with new technology, they will lose their business. So overall, the company has very high inherent risks. Well, secondly, is about the control risks. Control risks means the company's internal controls are weak. As for KM, this problem is very clear because auditors couldn't get proper documents for important items. This includes land, assets, and investment. The company also failed to control its subsidiaries. They couldn't provide correct information about them. Uh, the management is not doing a good job. They defaulted on loans and they also didn't submit their recovery plan on time. And their asset management is also weak. There were no proper checks or tests for the assets because of money pressure. Management may even break the rules to make the company look better. Well, even worse, their IT system is also weak, so this makes it hard to prepare correct reports. So, all these problems show that the company's internal controls are not strong, and this increases the risk of mistakes, wrong reports, or even fraud. Okay. Besides the problem inside the company, there are also risks from outside. Firstly, King M works in oil and gas industry. This industry depends a lot on the global economy. So if the global economy is weak or if oil prices drop, KM will have less income and it will also be harder for them to pay back their debts. And secondly, the company is a PN17 company. This means they must follow stricter rules. If they don't follow these rules, they may be suspended or removed from the stock market. And thirdly, new laws in the engineering and energy industries can also bring legal risks. That means if the company cannot follow these new laws, they may face penalties. Lastly, ESG is very important in this industry, but KM already has money problems, so their ESG performance may be not good. This can hurt their reputation, and it can also make it harder for them to get new fundings. So these outside risks make the audit work even harder. Auditors need to be very careful. Okay. And lastly is the fraud risk indicators. We also need to look at fraud risks using the fraud triangle that include pressure, opportunity, and rationalization. As for the pressure, the company is under huge financial stress. They have losses, cash flow problems, defaulted loans, and PN17 status. So management may feel they need to make the numbers look better. Okay. And the opportunity weak control give chances for fraud, and no proper documents for assets and investment, poor control over subsidiaries, and legal problems like winding up petitions. Okay. And the rationalization means people in the company may tell themselves, well, it's okay to change the numbers to buy time or project jobs. So overall, fraud risk is high, and auditors and management need to stay alert and fix the controls. Well, in short, KM faces many risks, and both inside and outside the company. So these risks make the audit very challenging. So auditors must be extra careful, and the company really needs to improve its situation. And next part will be presented by Wang Liyuan.
Thank you, Zhuoxuan. In my part, I'll be discussing 5 key audit questions related to the case of K&M Group Berhad. The first question is about what are the key audit risks in this case. The key audit risk would likely include the appropriateness of the going concern assumption, the risk of asset impairment, especially of property, plant and equipment or investment, the equity and completeness of liability, including potential undisclosed and liability, the valuation of complex financial instruments and the adequacy of disclosures, particularly related to the PN 17 statute and restructuring efforts. The second question is what added strategy would be the most suitable for addressing this case? Our answer is a primarily substantive approach would likely be more suitable due to the potential weaknesses in internal controls and their higher inherent risk associated with a financially distracted PN 17 company. While understanding control is still necessary, the auditors would need to gather significant direct evidence through substantive procedures to obtain sufficient appropriate audit evidence. Then move to the third question. The third question is, how should the concept of materiality be applied in the audit of K&M Group Berhad? What factors would the auditors need to consider when setting materialities levels? Would a single materialities levels be sufficient? Materiality should be applied at both the financial statement level and potentially at a lower level for specific account of disclosures, considering the increased risk of the misstatement in PN 17 companies. Factors to consider include the company's significantly reduced profitability. It is stat-based and it is equity. Given the focus on solvency and going concern, the auditors might set a lower materialities ratios than they would for a financially healthy company. Separate materialities might be considered for items such as bait governance or specific disclosure related to the PN 17 statute. Next slide. The next question is, what type of audit evidence should be crucial to gather to address the going concern assumptions for the K&M Group Berhad? Crucial audit evidence would include revealing managers' going concerns assessment and underlying assumptions, evaluating the feasibility and likelihood of success of any restructures plans, analyzing cash flow forecast and sensitively analyze, examining compliance with debt governance, involving correspondence with lenders and other key stakeholders, and assessing the company's ability to gather general features, revenue, and control cost. The last question is about if a modified opinion is issued due to going concern uncertainty, what should be included in the audit report and what key audit matters might be disclosure. The material uncertainty related to going concern sections would highlight the significant uncertainty about the company's ability to continues as a going concern and would refer to the relevant note in the financial statements that provide further detail. Potential KAMs might include the assessment of going concern, the valuation of assets, and potentially the accounting for any significant restructuring activities or related party transactions if they are deemed to be of more significance in the audit. That's all of my part of the presentation. Now I will hand it over to my group members, Ma Shengtong.
Now, I will walking you through the last part of our audit case. Focus on how this scaling reflects real auditor practice and what key professional judgment are involved. This case of KM Group behind clearly reflects what auditors face in a real-world high-risk engagement. First, the company is classified under PN 17, which indicates five financial distress, including continuous losses, massive law defaults, and negative stakeholder equity. In such situations, auditors are required to perform enhanced pressures to assess going concern risks and gather stronger auditor evidence. However, this is exactly where the difficulty lies. Due to poor internal controls, key auditor evidence was missing or unreliable. For example, the company could not provide proper documentation for asset valuations, subsidiary investment, and corporate guarantees. These are not just technical gaps, they significantly undermine the reliability of the financial statements. In practice, auditors often struggle with this kind of situation where management is unable or unwilling to provide sufficient support. This brings us to the core of auditor work, the application of professional judgment. Auditors must assess multiple risks, inheritance risks, control risks, and especially fraud risks. In the case of KM, all elements of the fraud triangle are present. Prefactor, the company is under intense financial stress, opportunity, weak controls, or motivation. Rationalization management may justify misstatements in order to buy time for restructuring. Because of this, the auditors must maintain strong professional skepticism throughout the engagement. Ultimately, KPMG equals a disclaimer of our company, the most favored type of auditor opening due to the lack of sufficient and appropriate audit evidence. This is a raw consequence we see in practice and unnecessary action when adult limitations are provided. To close, the KAM case is not just an academic experience. It mirrors the challenges authors encounter in the field: high-risk clients, missing documentation, poor governance, and judgment calls accurately. It reminds us why audit quality, ethics, and skepticism and absolutely vital in protecting stakeholder trust, especially in a company as financially distressed as KM Group behind. Thank you. Our group presentation is finished.